This week we're continuing our discussion on student loans. Today we're going to be talking about whether it's beneficial to invest your extra cash or put that towards paying down your student loans. So there's a couple things to consider when trying to make this decision. First is going to be, what interest rate are you currently paying? This is key. If you're paying a really high interest rate, then most likely it's going to be hard for you to make up that money in your investment returns. So in that case, it probably is more beneficial to just put that extra cash towards paying down your loans and getting those paid off as quickly as possible to save yourself money in the long run. On the other hand, if you've refinanced your loan, and I talked about this in another video, so take a look at that to see if you'd like some guidance on how to do that. But if you have refinanced your loan and you're at a pretty decent rate, under 5% at least, then you can use a calculator to plug in the numbers and see if it makes more sense for you to take the extra cash that you have available and pay down your loan, or if it makes sense to invest that money. There's also a couple of situations where you may want to do this versus not doing it. And for me, I chose to invest my money versus paying down my student loan. So I aggressively saved up enough to pay down my loan and I refinanced it. So I got my rate low. I like the idea of having that extra cash on hand in case I need it, especially with me starting a new business. In the event that I need extra money, it's available and I don't have to go take out a private loan to fund my business. I can borrow from myself. I believe in using leverage and using debt to your favor. Another case could be if you want to maybe do this temporarily to get yourself to a point where you have an emergency fund or you have a cushion, and then start aggressively paying down your loans. Finding out what rate you're paying right now, what rate you could be getting in the future if you refinanced, and what your investment returns can do for you over time. Using financial calculators and letting the numbers decide, I think, is the best option. So I'm going to link to some helpful calculators below. First, I'm going to enter my loan information, or this is what I did when I decided to invest over paying off my loan. Starting balance, $35,000, interest rate, loan term, and then this shows how much I'll pay principal and interest over the course of 14 years. Total payment, I would have paid $44.9 thousand, and interest $9,900. This is about my monthly payment right now. So then I take this information, jot it down, and I go to an investment calculator. Smart Asset, I like using this one. And let's say instead of paying that off, we invest the money. And I think you have to have something there, but rate of return, I'm going to use 6%. Historically, the rate of return in the S&P 500 is 7%, and that is adjusted for inflation. I'm going to use a little bit less just to be on the more conservative side, and we'll say 14 years. So here, my investment, if I put this money into the S&P 500 for the next 14 years, I will have about $79,000 at a 6% rate of return. I could have more, I could have less, but that's just looking at what an average would be. And it shows, okay, this is my principal balance remains the same, and then this is the interest that's growing. And then you can scroll down here and you can see year by year how this accumulates over time. So then I jot down these numbers and do some math. Okay, let's go back to the investment calculator. We could use the Smart Asset one, the same one we used before. Okay, let's assume you did pay off that student loan. That means you have that additional $268 per month that you could be contributing because now your student loan is paid off and you have that money that would be going to the loan that you could be investing into the stock market instead. So starting with, let's say $100, you contribute $268 monthly at an average rate of 6%, 14 years to grow. This investment will be worth $70,000 after 14 years. So I've contributed $45,000, I've earned $25,000. Jot these numbers down again, and then we just have to do some math to see what would work, and I will show you what that looks like. Keeping student loan. we've got $35,000 in loans, a payment of $268 per month, and an interest rate of 3.73% interest. If we pay this for 14 years, we will pay a total of $44,983, and this is from the calculator that I was using. Interest is $9,983 over 14 years. Now, the second option we have is to, instead of keeping the student loan, we can invest the money. So here's what it looks like investing. You take that $35,000 and you put it into the S&P 500. Quick timeout here. I'm using the lump sum amount of my loan in this example, but of course it takes time to save that money up. While you're saving, you can put the money directly into the stock market and let it begin working for you right away, which is what I did. I took the extra money above the minimum payment due that I could have paid towards my loan, and instead I invested it along the way until I had enough to make a decision of paying off my loan or keeping the money invested, which is the calculation I show here. You can use the calculator below to see how the numbers work out of putting your extra cash towards your loan or investing that cash instead along the way. We're going to use an average of a 6% rate of return. After 14 years, we're going to have a total of $79,132. Our $35,000 has grown to this amount with this interest rate. So we've got these two numbers. This is what keeping our student loan looks like over 14 years. We're spending $44,000. If, on the other hand, we invest $35,000 after 14 years, we have $79,000. So you can't just say, okay, we have $79,000, so the difference between these two is what our profit is, because if we pay off the student loan, then we have this extra $268 per month that we could invest into the stock market. Here's what that would look like. And this is just using that investment calculator as well. So we invest now the $268 per month. We have a 6% rate of return over 14 years. And that gets us to a return of $70,529. If we invest the $35,000 up front, we have $79,000. If, on the other hand, we spend 14 years doing $268 per month, then we end up with $70,529. So really the difference between these two numbers, that's going to be the profit, or what we would say, is it worth investing or not? So if you've got a positive number here, then it's more likely worth the time to invest the money versus paying it. And so what we do is take this $79,000 and minus this $70,529, and that gets us $8,603 extra for investing. So we're taking this number right here and we're subtracting this number right here, and this is our profit. So this might not be a big enough number to make it worth it for some people. For me, it was. Like I said, I like having the flexibility of having this money on hand in case I need it for short term. Another thing that you could do is this. I have the terms for, here. I have the terms for a 14-year loan, but I could double my payment, right, and make this a 7-year loan, but I'm not obligated to pay. Like, I'm obligated to pay this, but I can pay more, or if there's a time where I need some extra cash flow, I can just pay what I'm obligated to pay. And the other times that I can afford more, then I pay more. So that's kind of how this breaks down. But for me, this made sense. And a lot of it's going to come down to the interest rate that we're getting. So if you're paying a higher interest rate, then this 6% is going to eat away at more of the profits, and there's not going to be as much profit down here. So just do these calculations. I just wanted to show you what it looks like when I ran the numbers. I ran them on paper, but I wanted to make it more legible for you to see, so I put it onto the whiteboard. But these are the exact kind of calculations that I do when I'm trying to figure out if I should invest or pay off or any number of things. And another thing that you can do with this is say, okay, I want to pay a little bit more towards my loan, and you can just plug in different numbers and see all the different outcomes in those calculators that I've linked below this video. One case where it might not be beneficial for you to invest your money versus paying off your loan is if you aren't disciplined in constantly putting that money into your investment account on a recurring basis, then you might be better off just paying down your loan, because you would have to have that same discipline in making the payment as in investing. And you could put this into the market on a regular basis every couple weeks when you get paid, and that would allow you to take advantage of the different ups and downs in the market. So be aware of that and know yourself. If you're the type of person that can only make the minimum payments on things, whether those payments are large or small, it might benefit you to pay down your loan. Versus if you know that you have the self-discipline to go ahead and invest that money so it's working for you, then you can have the freedom to do that. But if you're spending the extra money versus investing it, then you're just paying extra interest, you're not getting your loans paid off, and your money isn't growing for you. So that's really not a place you want to put yourself in. So be aware of that, know yourself, and take that into consideration when you are deciding if you should pay off your loans or invest your money. Also, if you just don't like having debt, if it's something that eats at you, then also that's okay. Then just pay down your loans and you can invest later. There's always time for that, but just knowing what your options are and taking advantage of a situation where rates are still fairly low and the market can grow for you long term, it could give you just options of having some extra cash on hand if the need arises for you to be able to borrow from yourself. Keep those in mind when you're trying to decide on investing versus paying off your loan and what's right for you. Give this video a thumbs up if it was helpful. I'm gonna start talking about the stock market because it's been going crazy lately, and I really want to give you confidence in investing and learning how to do that. So thanks for tuning in. Please subscribe.